Eternal is what I'm talking about, which has managed to stay up 10% up right now, reached a high of 311 rupees and 25 paise right now at 299.80. But what a jump up for it. Mahima is joining us for more on the bull versus bear breakup. I think this name change was lucky for them. I don't know if they consulted someone before changing the name from Zomato to Eternal, but what a rise on the stock ever since the name change.
Absolutely. It's highest ever intraday gain since the stock got listed. The kind of gains that we've seen in trade today almost touched an intraday high of 13.5, 14%. But speaking of the bull versus bear for this particular case, there's a lot to look at. In terms of the growth aspect, the revenue aspect. Revenue growth has been better than expectation. The expectation was that it will come at around 6,500 odd crores, but it came at 7,100 crores, and that was cheered by the street, which is kind of seen in the stock performance today. But overall, food delivery growth has lagged for the company in the past 2 to 3 odd quarters, and this quarter also the same trend has continued. It's come at around 16 odd % this quarter versus a guided of 20% growth. The next one overall is about the quick commerce space. Blinkit has continued to see market share gain despite of the competition that is coming in from both listed as well as unlisted players. There's Amazon entering the quick commerce space. There's Zepto. There are analysts that believe that it's eaten market share of Zepto, so that's interesting. But overall, because of Blinkit going big in terms of dark store additions, margins will remain under the pressure in terms of near term, and that's what the management has guided for. And management has come out and said that overall they will protect market share over protecting margins as well. So that's with regards to where the quick commerce margin stands. In terms of the dark store addition, the management has said that they see visibility of 3,000 dark stores once they achieve the guidance of the 2,000 dark stores by this year end. But overall, if we see, competition is intensifying in the quick commerce space. Like I said earlier, there's lots and lots of players that are going big when it comes to quick delivery or even quicker delivery of around 30 odd minutes. And it's not just in the grocery space. There's also Nykaa that's doing 30 minutes delivery now. Next, in terms of the new inventory model that they've shifted to, they'll now be owning the inventory themselves in the dark store. And because of that, the overall view is that it will see a 100 basis points margin uptick overall, but because of going and shifting towards an inventory model, the working capital will increase for this particular company. So that will be an interesting aspect to watch out for, although management has said that they'll require an average 18 days working capital cycle, which is much lower than a retailer like something like an Avenue Supermarts. The last one is the brokerage call. Now, stacking views between Jefferies and Macquarie amongst one of the 4 bearish brokerages on Eternal per se. Jefferies has upgraded the stock with a buy rating from underperform and hiked the target price from 250 to 400. But Macquarie on the other side has maintained outperform and given a target price of 150. In terms of analyst recommendations, as per Bloomberg, there are 20 buy calls and 4 sell calls for the counter and a return potential which is flat, almost 0%. Lastly, of course, there are analysts which say that you shouldn't look at Zomato with respect to its PE multiples. But of course, the PE multiples were never cheap for this counter, and they're not going to get cheap even by the end of FY27, which is at around 108 times. So this is with respect to where the bull versus bear case for Eternal stands.